To MP Chambers for 5 minutes, please.
Thank you, Mr. Chair. Welcome back, Governor, Senior Deputy Governor. Thank you for being here. Just curious, there's a lag to monetary policy, I think what you've talked about before. Is there a lag to fiscal policy?
There are lags to fiscal policy. Again, it depends a lot what it is. So if you give a fiscal transfer directly to households, the lag probably won't be very long. If you embark on, say, an infrastructure spending program, the lag's probably going to be a lot longer. So, I mean, the difference between monetary and fiscal policy is monetary policy, we really have one target, one instrument. We raise and lower interest rates. We have reasonably good estimates of the lags. Yes, there's always uncertainty about those lags. Fiscal policy, though, there are many different instruments.
Thank you. So in the bank's analysis, have you looked at or considered, I know this year you said spending was below the 2% or at 2%, but the year prior, spending is up 25% versus pre-COVID levels on a run rate. I'm just curious if the banks considered that in their analysis of whether fiscal policy is expansionary or not.
Yes, we've been through a massive economic cycle, huge collapse in the economy, very rapid rebound. There were very forceful fiscal actions taken in the depths of the pandemic. Those certainly were key to a very rapid recovery, along with very stimulative monetary policy. So that is something we've looked at. We've also looked at, as we've discussed previously this committee, we were surprised with just how much and how fast inflation went up, and we've looked at those forecast errors to try to understand them and avoid making those mistakes again.
Thank you. Do you mind sharing with the committee the analysis that you've done about showing the spending by all levels of government? Could you table that with the committee and the bank's analysis? Is that something you would provide to the committee?
It's really all in the public domain. We publish our forecast every quarter. We come and we testify in this committee every quarter. As governments have been announcing their fiscal plans, we've been building those into our forecasts each time.
Okay. We'll change the subject for a minute. I think back to our first interaction at the committee. One of the objectives of QE, as I understand, was to help maintain a low interest rate, i.e., if the bank had not purchased government debt, it would put upward pressure on interest rates. Is that about right? Okay.
Yeah.
Okay.
Interest rates further at the term structure.
Thank you. This year, the federal government is borrowing $421 billion in the open market, and the bank is not purchasing that debt. Is it safe to say that that is a contributing factor to the rise in rates that we've seen? In fact, most recently, even when the bank has not increased its policy rate.
Well, government borrowing actually in public markets has gone down. During the COVID crisis, they had very large borrowing needs. As they've reduced their spending, their borrowing needs have come down substantially. And I guess I would add just on that, you have to compare Canada to other countries. Canada's deficit to GDP ratio is the lowest in the G7. Canada's borrowing needs are a lot lower than many other countries.
I have to break in here, and I quote from last week's presser. The U.S. deficit means a lot more bonds being issued, meaning increase in supply has to be absorbed, and that pushes prices up a bit. The U.S. is doing $2 trillion this year, Canada doing $421 billion. That's a record, and no one is talking about that having a contributing factor in interest rates. Mrs. Rogers, could you just mention whether you believe that it's a factor that interest rates are going up because of government borrowing?
Well, as we said in the press conference last week, there's a number of things. You're talking about just a sharp rise in the long-term yields on bonds. And as we said in the press conference last week, there's a number of things that are contributing to that. There's the term structure. We talked about, as you said, I think the quote you just gave was mine. I think the other thing I said is we're not seeing that same increase in Canada. We haven't had the same effect of
the 5 year. With respect, the 5 year moved up a bunch of basis points and without the policy rate moving,
Yeah, and there's a number of things contributing to that. It's
including
Thank-
the government
that's-
borrowing.
That's the
Yeah.
time. Yeah, thank you, MP Chambers.
Senior Deputy Governor, I just want to clarify because we had a bit of a back and forth before my last round. But I think I heard you agree that it's possible that the market is demanding a higher interest rate in order to absorb the record amount of government debts, all government debts. And I'll note that most of the debt being rolled over this year by the federal government is debt it incurred during COVID, and I'll say negligently borrowed at the short end of the curve. But isn't it possible, or would you agree that the market is actually demanding a higher interest rate because it has to absorb that amount of borrowing?
Whenever there's more debt being issued, there's more competition, so prices will go up. But
Okay, thank you very much. Governor, you mentioned in the press conference last week about the path to a soft landing is now narrower. My sense of it is the risk now is greater that we will have some kind of economic event or uncertainty that in normal times would demand a lowering of the interest rate. But if we can't get inflation down before that happens, and now it looks like 2025. So if we have some kind of reason to lower the rate before 2025, before inflation comes down, that we're not going to be able to lower the policy rate in order to deal with that economic shock. Is that?
As long as inflation is well above the target, it will certainly be harder.
Right. So it'll prevent us, high inflation staying around till 2025 will prevent the bank from acting to support the economy if we don't have inflation under control.
It will make it harder. I mean, it depends obviously on the size of the shock. If it's a big enough shock, the downward pressure on inflation caused as a result could cause us to reconsider our rates. But yes, I largely agree that when you're starting from a position when inflation is above target and it's been there for 2 years, you have less scope to lower interest rates and stimulate growth.
So kind of underscores the importance of governments at all levels of taking all the necessary steps they have in their toolbox in order to lower inflation, to basically make that narrow path as wide as possible in order for the bank to be able to act if it needs to act. Is that fair?
I think that's fair.
Okay. Perhaps when premiers write you a letter, were you just screaming inside wanting to write back 2 words, stop spending?
With respect to the letters, I know you're all hearing from your constituents. I know the premiers are hearing from their constituents. And this is putting more focus on inflation. It's putting more focus on interest rates. And I think that's a good thing. And look, as I've said already, I think it would be helpful if governments at all levels were considering the inflationary consequences of their spending decisions when they take those decisions.
And I think we're going to find StatsCan will report the new poverty line statistics early this year. I think it's January, February. The number of households or individuals that will now fall below the poverty line because inflation is going to be quite high. And I suspect, as you said before, inflation hurts the vulnerable the most. So it's important. If we don't get this right, it's the vulnerable people that will suffer most, correct?
I agree.
Yeah. So my last few minutes, I read with great interest that the bank picked up Nick Leswick from the finance department, so he's no stranger to this committee, and I know he'll do a great job for you, and I'm glad to see him go to the bank. Thank you for coming today. Thank you for being transparent and available to answer questions. I think it improves the confidence that Canadians have in the institution. Thank you, Mr. Chair.